So, for a number of understandable reasons, the state systems largely fell into desuetude. What does that word mean? Right, desuetude. Is that how it's pronounced? A state of disuse.
Okay. It's a new word for me too. That's a new one for me too.
It's a strong word right there.
Yeah.
So after a number of understandable reasons,
yes,
the state systems fell into disuse. So remember, there's a national and a state system. So, but it's the state system which fell into disuse. The priority of most companies selling stock was to get as much capital as possible from as many investors as possible, irrespective of where they lived. Creating stocks tradable on national security markets offered greater demand for the stock, greater liquidity, that is, the ability to have ready cash to buy and sell the stock, and greater opportunities for profit from the secondary trading of the securities. But the possibility of local stocks and local exchanges has been and remains firmly embedded in US law. It is a sleeping giant. Okay, so just from this paragraph, I'm noting that after these state systems fell in desuetude, probably one of the reasons is that the priority of most companies was to get as much capital as possible from investors, irrespective of where they lived. Because the state is a small location as opposed to the national stage. So why would companies focus on just investors within a state when they could go to the national stage? So creating stocks tradable on a national secondary market indeed would offer greater demand and more liquidity and greater opportunities to profit. So, I mean, like any product, it must have demand and, of course, liquidity, which is, the ability to have cash in the market, as well as opportunities for profit. Everyone wants to profit from these stocks. Okay, so because of these reasons, the national, or rather the state systems fell into disuse, but the possibility of local stocks and local exchanges still remains firmly embedded in the US law. It's still a sleeping giant. Every now and then, a story comes along that reminds us of the existence of the state systems. For example, Ben and Jerry's first issued public stock. When Ben and Jerry's first issued public stock, it was basically a statewide offering. You had to be a Vermont resident. Vermont is a US state, right?
Yeah, it is.
Yeah. So you had to be a Vermont resident to buy or sell the securities. Subsequent stock issues by Ben and Jerry's, however, were conventional national offerings. Gradually, the company lost its tether to Vermont and ultimately was purchased by Unilever in a hostile takeover. Right? Let me just try to understand what Ben and Jerry's was. Homemade holdings.
Ice cream, frozen yogurt, sorbet, and non-dairy. Yeah, I think they were like some kind of
in Vermont.
Yeah.
Okay, so it's still around, but it was bought by Unilever in what they are calling a hostile takeover. So it's just an example of people who initially issued stock locally, but then subsequent issues were made on a national level, And I guess that exposed them to, the big hawks. So that would be something scary, a big hawk coming to take over your company.